What's clearly looking the worst this morning is the Taiwanese market.
But in just 3 months, that top-line guidance has been revised lower to 1 to 3.5%.
It was a miss coming in from Hindustan Unilever in their first quarter.
Let's look at that. The first support comes in at the 19,715 level.
Almir Bharat as well, that was a miss.
So United Spirits was not a disappointment. The numbers were ahead of expectations.
70 points down, 185 points now, inching towards almost a 200-point cut.
Certainly not buying anything in the majorly in the large caps in the market at this point.
We will try to see how from here on we can reach back to around 30%.
We will be seeing a little bit of increase in the cost of deposits.
Net profits and revenues actually better than what the street was estimating.
What's looking very, very good is the kind of savings they've done.
Mattel is banking on the Barbie movie to help monetize this iconic household brand.
The bigger cut is coming on Nifty, courtesy the IT names today.
Well, you're with us here on a new edition of Closing Bell, the last closing bell for the week, and what a closing bell we are having. The market is down and out as we've been reporting from the morning. We're coming to you from the CNBC-TV18 News studios. I'm Prashant, with me, my colleague Nigel here in the studios, and Rima is joining us from home. I mean, it's not the rain which keeps Rima at home. Rima, hi. So, we'll just come to you in just a minute. I just want to quickly point out that the cut today that you're seeing on the Nifty is basically because of two things. One, IT stocks, 3 IT stocks and Reliance. 4 stocks basically making up for 100% of the fall that you're seeing out there. The 200-point cut accounted for just these 4 names. And of course, then you can throw in a HUL and perhaps a name or two here and there. But these 4 are doing the trick here on the downside. L&T and large banks are batting for the bulls, and I think that is pretty clear. L&T in a large way with that 4% pop. Small cap index doing well. So that kind of tells you that, I mean, it's not as if there's no panic or there's no great amount of anxiety or anything. I mean, the small cap index is a good barometer, and that is continuing to move higher. Mid caps a little more subdued today. In the morning, we highlighted Nifty supports at 19,715. The low today came, not exactly to it. The low was 19,733. So we almost got to those levels. I was just looking at a slightly longer time frame. I mean, if this were to get a little deeper, the 61.8, the golden retracement, the 61.8% retracement of the recent rise is 19,600, roughly 19,620 to be precise. But the next support largely comes in 150 points out from here, which is about 19,600 or so. Upsides, of course, the recent highs, etc., will come into play. So next interesting 60 minutes coming up. Over the last couple of days, dips have been bought. Today also dips have been bought. It's just that at higher levels, there has been selling and no recovery in some of these large cap IT names really visible all through the day. Nigel.
Well, that's right, but Prashant, there's only so much that L&T can do on its own, right? Yeah. It's a 4% weightage out there. It reminds me of when Sachin and Azharuddin used to go to South Africa, and only both of them could play on those bouncy tracks. And once they were out, it was the end of the game. The problem today is we expected the Nifty Bank as well as L&T to do some heavy lifting, but the Bank Nifty is down 100 points. It's been showing, some kind of phases of form actually, because it went into the green, it came down, it was up close to under 100 points of times, and that's going to be the swing factor. For the last 60 minutes or so, you need to focus on the banking names and the banking stocks as well, because Kotak Mahindra Bank and ICICI Bank, they come out with their set of numbers tomorrow, and they will be reacting as well, to those numbers. So the Nifty Bank is going to be a swing factor. What else then is moving around? Well, the mid-cap index, it's not so bad actually, though you have more number of stocks declining in comparison to the number of stocks that are advancing. But a few stocks. Bandhan Bank, there was a large trade. More than 1 crore shares got traded. Bandhan Bank has moved up. It's at the high point of the day. We'll try to find out who exactly or get a sense about who the parties were. But that clearly was a bit of an overhang on the stock. And once that's gone out of way, more than 1 crore shares change hands. The stock has moved to the high point of the day. Honeywell as well is moving quite well. That's moving higher as we speak. And a couple of other notable losers in the last few minutes is JSPL. JSW Steel, they came out with a set of numbers. It looks quite good as well. The numbers, no two ways about it. But the street is saying, will it be sustainable from here on? So initially when JSW Steel came out with a good set of numbers, you had all these ferrous stocks that moved up. But now they've come back down. Even JSW, the one that delivered a good set of numbers, it's actually in the red after seeing a good pop. And all the other steel names as well are a little bit lower. Well, Rima, Infosys, that's the heartbreaker of the day, I think so. Bracing for 20,000 odd, not to be. Infosys said, no, I've got a plan of my own.
I know, just yesterday you guys were discussing, right? Should we recycle those sensex 20,000 t-shirts into nifty 20,000? And look where we are right now, 19,750 on the nifty. And a lot of the bad news is on account of Infosys. But you know, there are two mid-cap IT companies which are still seeing buying. One of them is Zensar and the other one is Mphasis. It's not that Mphasis numbers were great, though the management did sound, confident about sequential recovery from here on. But you know what's common between Zensar and Mphasis, which pits it against, say, a Coforge and Persistent, is that Zensar and Mphasis were rank underperformers. Their valuations relative to peers are a lot cheaper. That's the reason why they're still seeing buying today, Zensar and Mphasis. But on the other hand, even something like a Coforge, very confident sounding management about holding on to their full year guidance. But the street says, well, not at these valuations, and the stock has sold off. So Persistent too, good Q1. Steady, in line, no disappointments. Management also sounding pretty okay, but the stock is down close to about 5.5 to 6%. But how should you position yourself? What are the trades that you should take on this Friday afternoon ahead of the weekend? We've got Mitesh Thakkar with us. Mitesh, what have you made of the day so far? Your thoughts on the trends and the strategy?
Good afternoon. So I think the day isn't very positive. I think with the gap down today early morning, what happened was that the intraday indicators had started to look down, which typically means that there will be some pressure of profit booking. And during the day, we did not try to attempt to, get past 19,900 again and try to cover the gap. So I think now there is a stronger probability of 19,700, which is where the intraday averages are placed. That could be, violated or taken out as a support area. And once that happens, good chance that we are looking at a test of around 19,500, 550 zone. So there could be slightly some more corrective movement. In case 19,700 holds and manages to stay and the Nifty manages to stay above this level for the next 2 to 3 sessions, then I think we are looking at a consolidation between 19,700 to about 20,000. So basically, the uptrend could have taken a pause. Let's see whether this turns into correction or just a consolidation. That is the question which I'm looking at. And on the stock side, I have a buy on Berger Paints with a stop at about levels of 680 for targets of 720. And Britannia is negative call or sell side call. Keep a stop just above levels of 50-50. Look for targets of 49, 40, 49, 45 to begin.
Okay, all right. We'll keep coming back to you, Mitesh, as the session progresses. For the time being, let's focus on a couple of stocks. Atul Limited, that's one of the stocks on our radar. The stock actually is surging post its Q1 numbers. Sonal spotted that. She's joining in to give us a quick analysis on that. Sonal.
Thank you so much for that. Well, Atul Limited's numbers, though lower on a YY basis, are much better than what the street was working with. And that's the reason why we are seeing this rally on the stock. So if you compare it with the poll, revenues have come in at 1182 crore rupees, largely in line with estimates. But the real beat has come in on the EBITDA at 182 crore rupees versus an estimate of 144 crore rupees. Margins are 300 basis points higher than the poll at 15.4%, ultimately leading to a profit beat as well. Yes, if you look at the numbers YY, it is a decline. And if you look at the segments as well, Life Sciences has seen a 28% decline in revenues, Performance Chemicals down 17%. Their EBIT has declined as well, both on a YY basis. But if you look at the quarter-on-quarter recovery, that is what the street seems to be liking as well. The Performance Chemicals EBIT has surged on a quarter-on-quarter basis. Overall numbers have seen an increase on a quarter-on-quarter basis as well. Revenues down 1%, but EBITDA is up 22%. Operating profit margins are higher by 300 basis points, leading to a profit growth of 11%. All this is something that the street is liking. And on the back of this, Aarti Industries also is at the high point of the day, because both these companies, they cater to the discretionary segment. The expectation was that it is going to be very weak because of weakness in the export markets. But since the numbers are not as bad as expected, there is some rally that we are seeing on these counters today.
Thanks very much, Sonal, for that. Prakash Devan is joining us now to take some questions around markets. Prakash, good to have you with us here as always. Just a quick word, if you will, on the chemical names, as Sonal highlighted, the Atul numbers. I don't know if these numbers are enough to spark any kind of excitement move in other stocks. Aarti, for example, for many quarters has disappointed. I don't think expectations are very high this time around as well. But what's your sense?
No, absolutely, Prashant. So, I think these numbers start giving us an indication which is probably not yet very well established, though. But the first signs of a bottoming out within the chemical space on some of the good players, particularly, if you look at the kind of data points that are coming through from global demand, metrics. Agrochemicals will probably be the first to get off the block. So whether it's the likes of Sumitomo or PI, some of these companies will probably do much better, and then the specialty chemicals probably add to that. So I think the bottoming out process is there. The margins in Atul's case very clearly tell you that there is some sort of pricing power that's still intact. It's not completely eroded, and everybody is very clearly chasing some margin improvement or restoration, and not just revenue growth. So, once demand picks up, you'll probably start seeing operating leverage come back in some of the more well-established units which are there. So, I think it's a good time to look at some of these. You could take a look at SRF, for instance. I mean, very clearly, it's held on its own, and then there would be some improvement going forward from from all of these larger players. But you've got to be watchful that you don't extend this rationale to the smaller ones, which might still take a couple of quarters to come back.
Let's talk about HDFC Life. Reported numbers a while back. Surbhi is here with the details and the fine print. Surbhi.
Thanks so much for that. So it seems like it's a little bit of a miss on the HDFC Life. Now the APE has grown 13% on a year-on-year basis. It is above our poll also. It is coming at 2,300 odd crores. The poll was of 2,280 crores. The VNB growth, that is up 18% on a year-on-year basis. But the street was expecting a growth of over 20%, 22% to be precise. So it's a miss on that front. VNB margins have come in at 26.2% versus 25.1%. So year on year there has been an improvement, but the expectations was of over 27%. So it's a miss on that front as well. The embedded value, that is up 29% on a year on year basis, and that is largely led by the unwinding rate and also the economic variance, not so much by value of new business. So that is something that we'll be watching out for. Any commentary from management on that front will be important to watch out for. Overall, it seems like a little bit of a miss. We'll get more details on the con call today.
Okay, thank you very much for that. The stock is down 3.5%. Prakash, would you buy the dip on HDFC Life?
Absolutely. So I was just wanting to say that these numbers might seem optically weaker because given the fact that there is a reset or an adjustment of the Exide numbers from year on a YOY basis, right? And secondly, the management commentary sometime back on our channel was very clearly indicative of the trend that they are seeing, which is more, back-ended in the year. I mean, there's nothing in this quarter that is very exciting usually for life insurance plays. But in spite of that, they've clocked some very decent numbers. So I'm sure the market will probably digest whatever weakness is being perceived, and then, of course, some of these stocks are extremely expensive from a valuation perspective, but they still offer you some sort of a comfort given the long-term visibility of earnings and revenue growth there.
Okay, all right, Prakash, request you to stay with us for the time being. We'll slip into a short break. On the other side, we'll be joined by Abraham Eleswarapu of BNP Paribas. You stay with us. Welcome back. If we end here, actually, it'll be a disappointing trading session. You'll want that 19,750 odd level at least to hold out. The mid-cap index select stocks are jumping up. Like you have Manappuram Finance last few minutes. That's moving with good traction. So that moves to the high point of the day. Emphasis stock flying away, actually. So some of these mid-cap IT names, they're still doing well. The numbers were weakish, but stock spikes up to the high point of the day as we speak. But it's Friday, so it's time for a drink. United Spirits, well, that one's surging in trade. Surabhi joins us to explain to us why the street likes that drink. Surabhi, cheers.
Cheers, Nigel. So, firstly, the numbers were beat all analyst expectations. The EBITDA margin was the highest in 8 quarters. They saw margin expansion of over 500 basis points, came at nearly 18% versus 12.5% same time last year. So, there are two things which is driving this EBITDA margins. One is the premiumization play. They've recently sold off their popular brand and they're focusing on the premium brand, which is Prestige and above. And in that, they saw a revenue growth of 21% on a year-on-year basis and a volume growth of 10%. So that is aiding the EBITDA margin. And secondly, there has been a cooling off on the input cost. So they've seen a gross margin expansion of nearly 270 basis points on a year-on-year basis. Sequentially, though gross margin is still lower, but the inflation impact will cool off with time in the second half of the year as well. So that is going to aid the EBITDA margin going forward as well. Additionally, the consolidated revenue has seen an IPL revenue of 500 crores, which is over 100% on a year-on-year basis, and the EBITDA is over 200% on a year-on-year basis from the IPL part. This is due to the higher media rights this year. Apart from that, in July 2021, there was a management change in United Spirits, and since then, United Spirits is focusing on improving its product mix. It is focusing more on the premiumization, and also there has been a significant improvement in their balance sheet with an asset-light strategy and improving debt numbers as well. So all of these things are working in favor of United Spirits. The stock is currently trading at 44 times FY25 PE.
And today in the evening, I think at 4 o'clock, there is a conference call in which I think there would be a fair bit of interest after these numbers. But, Surabhi, you mentioned that those IPL revenues, is some of that rubbing off on Sun TV as well?
That's right. So IPL rights IPL rights is going to benefit Sun TV as well. So Kotak Institutional Equities have built in an IPL revenue of 450 crores for Sun TV for Q1 versus a 240 crores in Q1 FY23. And they expect the EBITDA from IPL to be 290 crores versus just 90 crores same time last year. So the jump in IPL profitability will drive almost 37% growth in EBIT and a 30% growth in PAT for Sun TV, and this is according to Kotak Institutional Equities.
Okay, all right. Thanks a lot for that, Surabhi. Well, Prakash, what do you make of the stock, Sun TV?
No, I think there are a couple of things that are happening to help them out get through this low slump kind of a phase. But the real growth will, of course, be dependent more on the ad revenue and the spends that come back, So there's still a long way to go from that perspective, but there's a lot of money coming home, whether it's through IPL, whether it's from Spice, so all of that's probably shoring it up. So things could look up, but I'm not a big fan of the way the business is run with so much of gaps and lumpiness in revenue growth, and you have far better businesses in the media space that you would look at. So but yeah, I mean, I just wanted to tell you on the United Spirits thing, which you started off with, Nigel. There's much more to cheer if the FTA with UK goes through. The Diageo marketing muscle could probably start coming in very handy for this business, and you'll see a altogether very strong revenue stream add-on. So my target from this is much higher, and we've been looking at it positively from that 650, 670 zones a year back. It's finally coming of age. We all know the reasons, but I'm saying there's lots more new optionalities that would start helping this company out.
Okay, let's certainly hope so that this is a steadier path than before now for United Spirits. Prakash, thank you very much for joining us. Nigel, you want to answer?
Yeah, no, just one thing on JNA Axles. On the top line, it's actually, I think there was a bit of a degrowth, but the reason that the stock is high, I think, is because they've announced a bonus of 1:1. So that's why I think that stock is up close to 3%. And margins are more or less flattish, but I think the reason why the stock is spiked up is because of that bonus.
Okay, well, keep an eye out on that one. Numbers seem to be largely in line with expectations. Okay, Christopher Nolan's Oppenheimer and Greta Gerwig's Barbies are the most anticipated movies of the season. The fever is running high all across the globe, and in India too. I can tell you certainly it's running high in our newsroom as well. People are excited. What does this mean for a movie exhibitor like PVR? You can see the stock price, and you can attribute that to big releases. I mean, they certainly do make a difference. Footfalls make all the difference. Stock's up 4.5%. We caught up with Ajay Bijli, Managing Director at PVR Inox, and just listen in to what we had to say in terms of expectations around these big movies.
Two of the biggest international movies that are coming to theaters this week, Oppenheimer and Barbie. What are the collections expected out of it, and what are the kind of bookings that you have seen at PVR across the country as well as here in this property?
Well, let me put it this way. My daughter yesterday wanted to see Oppenheimer, and I had a problem getting a ticket for her. So I was quite embarrassed. Okay. So after a long time, with the grace of God, I'm exceedingly happy that we are finding this opportunity where, movies are Hollywood movies. There's a Hollywood movie, both of them. And of course, Mission Impossible also just got released, where, cinemas are completely packed. And collection-wise, I don't know the exact number, but I think Mission Impossible 7, MI7 is touching about 70-80 crores already, which is very big for a Hollywood film. And Oppenheimer, Barbie also is looking like it's going to do over 100 crores of business easily.
Okay, those are numbers, and we'll see how that goes, and we'll play out some more of Mr. Bijli's interview a little later in the show. The stock is rock solid, about 4.5% higher. Abhiram Ellis is head of India Equity at BNP Paribas India. He's joining us right now to take some questions. Abhiram, good to have you with us here. Thanks very much for your time. Are you headed to a PVR near you to catch any of these movies, Abhiram? I don't think Abhiram can hear me.
All right.
I think the frame is frozen. We had Prakash on the phone. This is rains, I think. We'll have Abhiram back with us in just a bit. The market, if I just want to go back, is at the day's low actually. 245 points down. Yeah, we're pretty much kind of sinking a little bit here. 19,728 is where we are. And the day's low, and 19,733 is where we are at. I think it's the same combination that we were talking about. Pull up Infosys, that will account for a large chunk of the cut that you're seeing. 100 clean points, by the way, is on account of Infosys. Maybe it's a little bit more. Let me just refresh this. 110 points coming in from RIL. Reliance adding about 70 index points. That's 170 between them. And then you add a TCS and HCL Tech, and that's another 30-35 odd points. So these four names doing bulk of the damage. Abhiram is back with us on the line. Abhiram, I was just asking on a lighter note, are you headed to any of the PVRs or other movie halls nearby to catch any of these movies?
Well, I'm looking forward to a good long weekend, and I wish the same for all of you. And maybe that includes a movie too.
Now, to the theatre, or we'll wait for the OTT? That's the big question for these exhibitors, isn't it?
I agree with you, but I think that OTT is a significant competition. We were actually looking at the space briefly, and there is no doubt that it's the content quality as well, and also the straight competition from OTT. So these are two big factors to watch out for footfalls to return to theaters.
Abhiram, afternoon. Rima here. I'm sure you can guess my question, right? IT, you both of us have been tracking IT for a very, very long time. What have you made of this guidance cut by Infosys? You must have interacted with the company, right, between Q4 and Q1, because typically, you do end up chatting with the managements to get a sense about the demand, the inter-quarter update at conferences, etc. Did you, at any point of time, expect that the company is going to come out and slash the guidance like this?
Well, I can obviously comment from an overall sectoral perspective, and let's go back 3 months, and the story has not really changed in the space, which is that deal wins have always been strong. It's just a question of how they convert. And the start dates of those deals could vary between company and company. So last quarter revenue growth wasn't great. This quarter it hasn't been great either. I mean, across the board, to be honest. And it just having a result like this, I mean, the season that happened for IT so far is not entirely unexpected, let's face it, given all the headwinds that were happening. But we were kind of seeing through this and looking for the next 6 to 12 months to see these deals ramp up. And of course, all these companies announced some mega deals in the last 1 month or so. So I do think that stocks will bounce back from these levels over the next 6 months or so. Now, in terms of guidance cuts by various companies, I think it's very much dependent on their own deal positions and when those deals start to kick in and how you build those revenues from those deals into your guidance. It may just be the case that you have a couple of months where many of those mega deals don't kick in, and that seems to be the reason behind the outlooks of these companies.
Hi, Abhiram. Good afternoon. Good to speak to you. Abhiram, what about the banking names? What do you making of them? I mean, there would likely be some kind of NIM compression, but I think the markets have factored that in, right? How would you approach it between private as well as public, and would you look at mid-sized banks?
Yeah, I think the NIM compression angle is kind of known. It would probably happen, and whatever it is would be a little bit only. I think the real story is about credit growth across the sector, and also the quality of that credit. And I think by and large, companies are holding up really well. I really haven't seen any red flags. If anything at all, we've only seen an improvement in the on-the-ground conditions for companies. Balance sheets have still only gotten better. So by and large, if there is one space which I think there is still room for upside, it's actually financials. Now it comes down to whether it's large versus small. And within this, of course, it's all really company specific, but by and large, we prefer the larger private sector names. And just on that note, just before coming here, I was looking at stock performances and sectoral performances. And one of the things that struck me was that the Nifty is probably up about 15% or so from its lows, let's say, towards March end. And the small and mid cap space actually is up 25 to 30%. After such a one-sided rally, it's normal to expect some amount of cooling off or consolidation. So if you were to kind of bias your portfolio from here on, I think it would make a lot more sense to look at the large caps.
Any thoughts on commodities, Abhiram? That's the only space where there hasn't been really any FOMO, right? I mean, overall, because of China, etc., etc. You think that's left to be done? It'll get done or no?
Well, actually, it's kind of think of this in a slightly broader perspective. In addition to commodities, I would say that it's actually all globally linked names that have not really done well in the last 3 to 6 months, especially the last 3 months or so on a relative basis. So I would obviously be looking at that at all of these names with a much finer lens, so to speak. On commodities per se, I really don't have a very strong view, except that our house call is that oil prices will go up and will probably end somewhere in the upper 90s or mid 90s, let's say, to the barrel by the end of the year. So that would suggest that there's probably some upside to this. And it's all obviously predicated on tighter oil markets to start with. So I'm not sure that they're factoring in a significant pickup in demand from China or elsewhere. But even if that were to happen, maybe that's more upside. So overall, on oil, we think that the market may be quite bearish and the prices may actually go up towards the end of the year.
Abhiram, do you like the entire home improvement space? Cables, wires, tiles. These companies have been reporting good numbers. The stocks have rallied. The valuations have gotten re-rated. Are you comfortable buying them at current levels? And if yes, which pocket segment?
Well, I got to say that we missed the cables and wires segment. It's done really well, hasn't it? And I think that we obviously focus a lot more on the input costs, such as copper prices and so on, because it's a pass-through in some of these spaces. And we thought that maybe copper prices will start to fall, and as a result, the top lines may suffer. Whatever be the case, these companies have obviously outperformed. They've done really well in terms of execution in terms of how they handle their margins and so on and so forth. But now that we've missed that, I really don't see any point in chasing it at this stage. The stocks have done really, really well. It's at least the cables and wire space is not the area we're looking at, but durables as a whole, there's some areas I think where there's still strength. There are more diversified players in the consumer durable space, and I think we'd focus on those for the timing, just as we've done through the year so far.
Abhiram, let's talk about the old economy, the cement stocks. Everyone is bracing for some improvement. It seems it's not going to be a quarter one story. It'll have to be a quarter two story if there is signs of that EBITDA per ton improvement. Because two large names in the last 24 hours, Dalmia Bharat and Ultratech Cement, and both of them have disappointed. The stock reaction on Ultratech is only down close to 100%, but the whisper number was maybe they will disappoint, and Dalmia was a clean miss out there, close to around a 15% miss. How do you approach this space? If India is going to be growing, we're going to be doing well in the future, then cement's going to be required. But that's not the play.
I absolutely hear you. I mean, if you're looking at it from a 3 to 5 year perspective, then I think it's a good time to start looking at the space and adding to it. I mean, there are obviously two angles to this. One, of course, is the overall real estate market, which is doing rather well still, especially the more affluent side of it. And the second bit is overall infrastructure spending. There's just one little caveat on this, which is that as you approach the election phase, closer to it, things tend to slow down a little bit. And overall order flows tend to slow down. And we've had a sharp run in order flows across various sectors, right, going into this phase. Normally, this tends to slow down a little bit to the second half of the year. And maybe that's what is an opportunity to do more work on these names and potentially add them from a 3 to 5 year perspective. But I agree with you that once companies disappoint, then you got to see when the turning point is. And frankly, I don't have one. I'm not even sure it's 2Q, but maybe towards the end of the year is when we start looking at the space a little more.
Any other segments, Abhiram, sort of getting you interested to look at it closely right now?
I'm going to sound like a broken record here, but I still like what I first mentioned, which is financials is probably the space to be. And in that, I mentioned private sector banks. Historically, I've always spoken a lot about insurance companies, but they've kind of done really well in the last 3 to 6 months. But within that also, I think if you look at the last 3 months, maybe 1 or 2 names haven't done as well as the others. So I'll focus on those, the large caps. Overall, in the NBFC space, broadly, I think that, again, there are no red flags overall. So I'd still like the NBFC space. But like I mentioned earlier, I'd focus more on the larger names within the NBFCs. Now, where is the other space where there's some angle? I would think IT services still, I mean, especially after fall. I've noticed that every time there's a big fall, it's a good time to look at that. And the last bit is healthcare, both hospitals as well as diagnostics. Both of those areas look good to me still.
Actually, it's not so much a question, but you mentioned financials and you mentioned insurance, etc. Watch out for AMC companies as well. We reported yesterday that SEBI will put out that consultation paper on total expense ratio within a week. So, within a week could be, we don't know. I mean, it could be today, it could be next week. But it's happening, and it's supposed to come as a relief. Stocks did go up 3-4%. HDFC, AMC, Nippon, UTI, AMC, Aditya Birla. These are all names which could be in action once we get the new revised consultation paper, which is, as we reported, expected to provide relief. Abhiram, great to speak with you. Thank you very much for your time, and thanks for joining in. We'll take a break here. As always, we'll get you a check on what's happening in dealing rooms. Nimesh will get us that in D Street Chatter, and buy and sell calls, short-term trading ideas with our technical expert as well.
Welcome back. It's been a tough day of trade. Infosys itself has lost 51,000 crore of market capitalization. What are dealing rooms saying? What are they doing? Nimesh joins in with D Street Chatter. Nimesh.
Hi Rima. So yesterday, same time we were trying to cheer for 20,000, and we were quickly down more than 200 points from those levels. So today's fall is largely dragged by the large cap names. So if you look at Reliance, HUL, and of course the technology stocks, that's all putting pressure on the Nifty. In terms of flows, again, the one segment which is doing good is the financials within banks. I understand there is the private banks are well bid again in today's trade. But contrary to what the screen is suggesting, I understand there is buying interest as well in some large select names, in the IT names, so to speak, at lower levels. So clearly there is buying interest at lower levels from the larger FIs in the IT names. The broader market has relatively outperformed in today's market, and there are a lot of pockets and themes which are doing well today. The likes of railway stocks, media names, some bit of infra stocks as well, which are doing good in today's trade. So Nifty down, largely dragged by the large cap names, but the momentum seems to be still there in the broader markets. And as I said, the momentum is still within flows is largely tilted towards the financial names.
Interesting, some counter buying from large IT names. That's interesting, Nimesh. But tell us some few more stocks that you're looking at.
Sure. So in terms of individual stocks, the first stock on my list is Tata Communications. We've seen that stock big outperformer in the last couple of weeks. Now some bit of selling pressure from larger FIs, and there were a couple of downgrades as well from brokerages post the recent run up on the stock. So that's the reason why that stock is under pressure today. The second stock is SBI. Within the financials, this is one stock for second day running. There are very strong buy flows from large institutions into SBI. So again, within banks, the PSU banks, and within PSUs, SBI is something which has been well bid by large institutions. The third stock is Crompton Consumers. That stock is under pressure on back of sell flows, and also there was a Morgan Stanley tactical sell call on Crompton Consumers ahead of the numbers. So looks like the street is anticipating some weak numbers from Crompton this time around. And the last stock is Bandhan Bank. You pointed out in closing bell as well, there is a large block, nearly 1 crore equity changing hands. The sense I'm getting is maybe one of the domestic fund was a seller and a long only fund FI was a buyer in today's block deal. Remember, in Bandhan Bank, there is also an overhang of HDFC Group selling its 5% stake. Looks like they are not the party in today's block deal. So it's basically between FIs, between a mutual fund and an FI in today's block.
All right, Bandhan, some shareholding changes, but business has been tough for Bandhan. Inconsistent rather for a long time, and the stocks done poorly as well. Nimesh, thank you very much for that. Interesting list of stocks as always to track. Mitesh is with us with bought to buy or sell today for a reverse trade when we come back on Monday. Mitesh, what do you have?
On the stock side, I would recommend Atul. I think something has happened in the last 2 hours. The stock has had a massive jump up with good volume. Atul is a BTST to buy with the stop below 69.40 for targets of 71.50 on the upside. And ACC and cement names have been, slightly under pressure, and ACC is breaking down today. So that's STBT with the stop at 17.75 for targets of 17.40.
Okay, all right. Thanks for that, Mitesh. And Atul is higher because, there were numbers that came out around 90 minutes or so ago, and Sonal told us they're looking up, at least on a sequential basis. But the big event is going to be later this evening when big boy Reliance Industries will be reporting their first quarter numbers. Sonia joining us to fill us in with the key expectations. Sonia?
Let me start with the stock performance first. Reliance Industries has had a great run up until now. In fact, the stock is sitting at a 52-week high and is up almost 30% from the lows that we saw in the month of March. But let me run you through the basic numbers and then I'll talk about the key businesses. It's expected to be a slightly muted quarter this time around for Reliance Industries. On the top line, we're expecting a marginal growth to about 2.18 lakh crores compared to 2.13 lakh crores last quarter. The pressure will seep into the operational front. So look at this. 0.5% lower EBITDA is what we're looking at. The margins could come under a bit of pressure as well. And on the profitability front, we're expecting a 14% fall compared to what they've seen last quarter. So where does the pressure lie? Now, it's expected to be a mixed bag this time. While the refining segment has been under pressure globally and for Reliance Industries, the consumer businesses continue to be very steady. So let's talk about the refining business first. There is a dip in the refining margins this time around. In fact, Singapore gross refining margins have come in at $4 a barrel, which is a fall of 51% quarter on quarter because of the decline that we've seen in the cracks. Apart from that, if you look at the refining business, the dip in this segment will more than offset the higher petchem margins. And overall, in Q1, the gross refining margins for Reliance Industries are expected to fall 31% quarter on quarter. But let's move to the consumer businesses, which have been very steady, both geo as well as retail. On Jio, the subscriber additions will be a healthy 25% higher than what we saw last quarter, coming in at 8 million subscribers. And even if you look at, the core business, there's a 15% year-on-year EBITDA growth that we're looking at, while the margins will be steady at 52.4%. Even the retail business has grown very well. So there's a 20% revenue growth, a 32% EBITDA growth in the retail business. That's largely because of an increased store footprint and better operating leverage. Now, there are a couple of things that the street will look forward to in the numbers this time. One of them is any developments on the new energy business. In fact, Goldman Sachs put out a report where they are valuing the new energy business at a base case at $29 billion. So any update on that will excite the street. Apart from that, all eyes will be on the AGM and details of the Jio Financial demerger.
Okay, so any understand it, disclaimer comes up for you on the screen as well. Take note of that. Well, market expert Hemang Jani joins us on the show. Hi, Hemang. Good afternoon. Well, a few minutes before we get into the weekend, and hopefully it's going to be a good one. But today, a bit of a pullback, and the bulls, they were just moving one way, coming in there to bat, hitting a 50, hitting 100. It was getting all too easy. The bears have come back in style today, so the bulls are a little bit stumped. But what do you expect from the big numbers that are due? Reliance Industries, what's the commentary you're looking at?
Yeah, good afternoon, Nigel. Thanks for having me. I think in case of Reliance, we have to bear a few things in mind. One is that the run-up in the stock has been quite stupendous, primarily because of this demerger, as an event which is now out of the way. Talking about the quarterly numbers, in terms of the EBITDA, there is going to be a bit of a subdued performance. In fact, it's going to be down about 17 to 18%. And the refining business is going through a lot of pressure at this point of time, and there is some recovery in the petrochemical side in the retail business. So having seen a stupendous outperformance, maybe it's time to kind of really look at the numbers and what kind of a trend we can have from the O2C business. I think if you see a meaningful correction in the stock, let's say about 3 to 5% around the result time, I think it should provide a good entry point.
Hemang, hi, afternoon. Do stay on because the next 24 hours are potentially market moving. You've got Reliance Industries today, typically comes out by 7:30. But tomorrow you've got ICICI Bank and Kotak Mahindra Bank. To set the expectations, we've got Abhishek joining in. Abhishek, first kickstart with ICICI Bank, and what's the street watching?
Well, Rima, it's expected to be a strong quarter for ICICI Bank. Loan growth is expected to remain stronger. So Kotak Securities estimates loan growth of 18.4% YOY and about 4% sequentially. The net interest margin can come under pressure. We are seeing that across lenders, that cost of fund is rising. So Morgan Stanley estimates a 17 basis point decline in net interest margin on a sequential basis. Provision can rise quarter on quarter as per Kotak Securities estimate. Slippages also may see a rise on sequential basis. It's a seasonal factor, but watch out where the slippages are coming from. Are they coming from known stressed accounts or unknown accounts that may crop up? So Morgan Stanley estimates slippages as 5,500 crore versus 4,300 crore in the previous quarter. Asset quality largely to remain stable. Motilal Oswal estimates gross NPA ratio to be at 2.9% versus 2.8% in the previous quarter. Watch out for commentary from the management with respect to loan growth and business momentum going ahead. Two key stress numbers to follow: watch list at 4,700 crores and restructure book at 4,500 crores. How they behave will be seen closely. Our polls suggest NII growth of 35.7% YOY and about 1.5% sequentially. We are working with a profit growth of 33% YOY and about 1% sequentially. Back to you.
All right, Abhishek, but tell us about Kotak Mahindra Bank as well. What do you expect from there?
Well, the net interest margin can moderate over there on a sequential basis. However, loan growth is expected to remain healthy. Talking about loan growth, Motilal Oswal has estimated loan growth at about 18.2% YOY and 3.5% sequentially. Even the deposit growth is expected to remain healthy. Again, Motilal Oswal expects deposit growth of 18.7% YOY and about 3.4% sequentially. The net interest margin can moderate a bit given the fact that last time it was at 5.75%. Analysts analysts are expecting anywhere between 15 to 25 basis point decline in net interest margin. So need to watch out for the low-cost deposit momentum. Remember that across lenders, CASA ratio is falling, and in Q4 for Kotak Bank, it was at 52.8%. Asset quality is expected to improve on a sequential basis. Motilal Oswal expects, 10 basis point decline in gross NPA ratio, and management commentary and outlook will be important. On a standalone basis, our polls suggest NII growth of 32% YOY and about 1.7% sequentially. We are working with a profit growth of nearly 58% YOY and a decline of about 6.5% sequentially. Back to you.
Thanks very much for that, and it's going to be a busy weekend for you, Abhishek. We'll of course have numbers when we come back on Monday morning to react to. Hemang, of course, is still with us. Hemang, that's the one sector which is still consensus overweight, and maybe that's the consensus overweight positioning also is the reason it gets blamed for the non-performance. But actually, things like ICICI, etc., have not participated in this leg higher, right? Even Kotak Bank, Kotak, of course, has been in the underperformer of the lot. Do you think these are stocks which can do well from here?
Yes, Prashant, I think for a brief period, we had seen underperformance come through from Kotak Bank in particular, and some of the NBFCs of the smaller banks had actually outperformed. Now, once we have a little bit of clarity on the numbers where the expectations are running very high, let's say in case of ICICI Bank, one is really looking at about 35-37% kind of a YOY growth. And same is going to be the case with the Kotak Bank also in terms of NII. The operating profit may not show that kind of a strength. So the take is that since we are going to have a little bit of a underperformance come through from the IT, given the howler that Infosys has given in terms of guidance, the domestic cyclicals, be it banks or NBFCs, select auto or the consumer names, I think that is where the focus will be. So I think part of the outperformance will be due to the operating performance and the outlook, and partly because you will see some money moving into these names from some of the IT names. So overall, we think that the overall scenario is quite encouraging for the domestic discretionary and banks.
Okay, some flashes from Bloomberg at the bottom of the screen. Now, we don't know what is the reason for this, but MSCI Emerging Market, MSCI India index, which is tracked by passive funds, ETFs, etc., that is down some 9%. Even as the Nifty here is down just about 1%, a little over 1% or so. And of course, because MSCI India has India has a 14-15% weight on the MSCI Asia Pacific Index. The Asia Pacific Index is also slightly lower, but just marking that, nothing to note really. We're waiting for explanation. Could be a system error, could be, a fat finger, basically a wrong order punched or something. We don't know yet. So just marking that 19,769 is where we are at this point in time. Just 11 minutes to go for the market close, and it's a slight attempt at a recovery, but nothing very large at all. But from the lows, there is a bit of a pickup. The low was 19,700, and now we're at 19,768. So this is a decent kind of a pullback we've seen starting exactly 3 p.m. The low was made at 3, so almost this 60-70 point move has come in after that, between 3 and 320 right now. So that's the market view. Just a few more names before we sort of start to wind down things. Polycab is down about 3% or so after that spectacular move higher. Hemang, if someone is holding names like Polycab, etc., what do you do? Continue to hold, take profits after the very sharp move?
So a couple of points I would like to make here, Prashant. One is that, the fact that the quarterly performance was stupendous and the entire theme is playing out well, be it, building materials, tiles, plywood, even some of the pipe companies. So there is a certain amount of interest. Other important aspect is that the MSCI, depending upon the cutoff price for Polycab, there is a possibility of the inclusion in MSCI, and the way the stock has run up, there is a sense that it might get added or its weight may increase. And this being a mid cap, small cap category of stock, sometimes the price impact could be very high. So I think from that perspective, there is a certain amount of movement. Overall, we think that this theme, the building material, the ecosystem around that entire construction stroke, renovation, etc., is in the limelight. If you see the price movement of tile companies, Kajaria, Somani, Century Ply, even the pipe companies, we think that that theme could catch up given the kind of traction that one is seeing on the entire space. So I think it makes sense to kind of hold on to it.
Okay, another theme which is doing well are the railway companies. So RailTel, RVNL, Ircon, these are stocks which are holding up in the green. Hemang, do stay on. Need to slip into a very short break. We'll come back and just about 8 minutes left for closing.
Okay, all right. I think we'll get back from Rima back in just a bit from now. But Hemang Jani still with us. Hemang, actually, good to see. We're just targeting this level, 19,750. We went down all the way to around 19,700, and we have seen a bit of a bounce. I don't think we have discussed a couple of these old economy stocks, at least that came out with a set of numbers today. JSW Steel as well as Ultratech Cement. JSW Steel, the numbers look very, very good, but it appears pre-positioning was such that has resulted in the fall in the stock. And Ultratech Cement, the street was bracing, I think, for a weaker than expected set. How do you view both of them?
So, Nigel, Ultratech numbers, the operating performance was below estimates. The EBITDA per ton was down about 31 on a quarter-on-quarter basis. However, what we must understand is that the guidance that the company has given is extremely good, given the strong, performance in the on the infra side. The spending is continuing. You have general elections, so I don't think there is a case for a meaningful correction when it comes to Ultratech, because after a point you will start seeing the traction coming back, both in terms of dispatch numbers plus the margin side. We don't see any major concerns as such. As far as JSW Steel is concerned, what is important to note is that entire metal pack is going through a bit of a subdued movement. So unless we see a meaningful, surprises or a growth outlook which is very good and much better than consensus, the sector may go through a bit of a consolidation.
May go through a consolidation. By the way, do you guys have coverage on the railway stocks? Railtel, RITES, IRCON, RVNL, a lot of big moves there once again. The PSU space, not the private, but the PSU ones.
Prashant, what we are seeing is that the good run in terms of the news flow, the order inflow, that continues. And earlier, there was a lot of doubt about how long this entire theme will play out. And now we are seeing that more and more, PMS, AIF, the small cap, mid cap, kind of investment managers are actively pursuing this theme. So I think, it definitely makes sense to have small allocation towards some of these names, given the fact that, we are into election year where you will see both railway related as well as defense related, news flow and order outflow continuing. So I definitely think that it makes sense to have some participation there as well.
Okay. All right, Hemang, thanks very much for that. Good speaking with you. Have a good weekend and see you next week. We'll end 200 points lower, but that also means we'll be off about 75 points on the day's low on the Nifty. So it's obviously it's not a good close, but it's off the lows. Nifty Bank, by the way, ends right in the middle of the range. Bank Nifty also starting about 3 p.m. saw a decent bounce. And for that, we are down about 0.1%, nothing. For the week, the Nifty Bank, by the way, is up almost a full 3%. So that's Friday to Friday, and that's quite something. Nifty, by the way, is just up 1% for the week. Mid caps and small caps, just the indices, 1/3% lower on the mid cap index for the week, up about 3/4. And I think the small cap index 3/4 today, and for the week, almost a full 2%. So, actually, banks and the small cap index continue to do quite well, 3% and 2% respectively for the week. Nigel.
Well, Infosys disappointed, and you have a lot of these IT names as well, particularly the mid-cap IT stocks that took a knock. You have KPIT Technology, Persistent System, Coforge, all of them down anything between 3 to around 5%. Dalmia Bharat's numbers were disappointing. That as well was down close to around 5%. But all wasn't lost. It's a Friday. United Spirits, the numbers look good. The street liked it. It was up 6.5%. And India Mart, the margins moving back towards 30%. That's what the management guided for. And they said the number of paid subscribers in the past quarter was around 5,000. Next quarter will be 6,000. And post that, they get back to the run rate of around 7 to around 8,000. So that stock is well ended higher. An otherwise weak-looking screen, you had Atul Limited. That was up close to around 6.5%. To wind things down, the lone IT name that did well today was Emphasis. Stock was up close to around 5% odd. Prashant?
And the numbers were bad. Actually quite poor. It's just that the stock had already done quite poorly coming into the earnings.
Right, but we're done in terms of market action. But we have editors roundtable in the next 1 hour. So
see you on another table, basically. The table upstairs. Well, that's it from all of us here. That's a close on your screen. 1% down for the day, for the week, up and in a decent way. Don't go anywhere. Our Friday special, Smart Money, of course, will come up next. And of course, Nigel, me and others will see you at 4:30 on Editors Roundtable. Stay with us.